Now, commodities are still soaring, especially silver. Prices now topping $40 an ounce, many attributing the popularity of silver exchange-traded funds for helping to drive the metal to a 31-year high. So, which are the best silver ETFs? Joining us now, Paul Justice, Director of North American Research at Morningstar, William Rind, Strategic Director at ETF Securities. Paul, tell me about it. What is your favorite ETF and why?
Well, you've got two really good ETFs out there to get access to silver. On one hand, you've got the ETF Securities Physical Silver, but my preference right now at this point is the iShares Silver Trust, the ticker's SLV. This is a tough race, though, and it's really going to depend on the characteristics of the investor and which one they want to pick. On one hand, you got a cheaper fund at about a 30 basis point fee per year. The iShares one slightly higher, but the iShares one has considerably more liquidity. So if you're a larger investor, say you're going to make a $100,000 trade in silver, I'd estimate that you're going to make up that cost saving and the market impact of how much you'd move the market in silver in the ETF here. So if you hold for over 2 years, I'd probably go with the ETFs Securities one.
Will, you have to make the case to me, though. Why would you buy at this level?
Why would I buy silver at this level?
Yeah,
well, I think
why?
that it's a form of exchange. You know, we're seeing money managers looking at silver really now as a form of money. As a medium of exchange, silver is more attractive at $40 an ounce than gold at the high 1400s. And this is something that, if we move to something on the lines of a barter economy, using silver coins and using silver at the $40 an ounce mark is a lot cheaper than buying gold right now.
I guess what I'm trying to say, Will, is don't you think it's looking a little toppy? Like, hasn't a lot of the good news with regards to industrial demand, for example, been built in?
Certainly there's a lot of industrial demand built into this story, but the silver story right now is driven primarily by the overall safe haven attributes of precious metals, people looking to shelter themselves from possible inflationary concerns later on during the year, and the form of money attributes of hard assets like silver and gold.
Paul, I'm in the same camp. I mean, why would I get into silver or gold right here? It seems like if you're not already in, it is too late.
Well, that may or may not be the case. Predicting the price of precious metals in the future is a very difficult task. I think it's better to look at it on a relative basis. And we made the recommendation to buy silver over gold back in November 2009.
But what about right now? What about right now? I mean, that may or may not be the case. That doesn't help me.
Well, it's going to come back to the madness of men and some hoarding effects. And what I would say is you've seen a lot more hoarding in silver recently than you have in gold. In fact, right now, the money that's accumulating in these funds is outstripping the annual production of silver, and more people are competing against each other just to acquire the bullion and kind of ignoring the fact that 40% of the silver production typically goes to industrial uses.
I mean, Will, if we keep destroying fiat money, silver's going to benefit, as you said before. Let me ask you how you like to play this story.
Well, naturally, I'm going to say that SIVR, which is ETF Securities Physical Silver ETF, it's actually backed by physical silver. It's 40% cheaper than SLV, which is the iShares product. Trades the same spreads in the market, about a penny wide. So for investors, it's a clear choice for me, which is the ETF Securities SIVR Silver ETF.
I mean, obviously, as long as the dollar keeps on going down and as long as the QE2 continues and the Fed keeps on backstopping everything, these precious metals are going to go up. Paul, what happens when QE2 ends and interest rates potentially start rising? Will silver and gold stop in their tracks?
They very well could. We could see investors start to pile out of these funds. And what would you see at that point in time? I think you'd probably see a stronger price reaction within silver than you would in gold. What we've seen is that, since the 80s, we've seen an average price gold to silver ratio of about 63 times. Well, that's fallen below 40 pretty recently because of the strong run-up in silver. So if I look at those averages and think that's going to mean revert, gold would probably be a bit of a safer loss for me than silver would.
Okay, guys, we're going to leave it there. Thanks to Will and Paul for joining us. And on CNBC.com right now, an interactive slideshow breaking down the 10 hottest commodities in 2011. Check it out.